Welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stuart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Judd, how are you today?
I'm doing great. I snuck out for a family vacation last week, and I'm missing you guys, and here and ready to go.
Well, welcome back. We missed you too. Where'd you go on vacation?
Jacksonville, Florida.
Nice. Okay, wonderful. And Stuart, how are you?
Well, I'm doing unbelievably well. Like the irony today is that, we're filming here in our Tempe office, but I'm actually on vacation right now. My family's back in California, and so I did a quick flight over, and I'm flying back out as soon as we're done here today. So I needed a vacation.
Yeah, oh, definitely. Well, you both work so hard. It's just so deserving when you do take that time off. So most definitely. But welcome back, and I'm glad we're all together today. So, Stuart, I want to ask you, everything in the market right now, how are we doing? What's going on with the economy? Are we in a great position? What's happening, in your opinion?
Well, there's a lot of conflicting data out there, but the one thing to know is that we are at all-time lows in terms of interest rates, and we're at all-time highs in terms of the stock market itself. And remember, both present some substantial risk. So let me show you a graphic here of the S&P 500 that'll show you basically the trend that we're on here. So we are at the highest peak in market history, plus or minus a point or two here. But if you take a look at the previous two corrections, one in 2000 and then the other one there in 2008 on the illustration, we saw 50% losses in both of those cases. And so I think today, Cynthia, that we are in a position where there's a lot of risk out there. And people need to consider that, are they comfortable losing 50% of their portfolio if the market pulls back?
Sure.
And there's just tons of those risks out there. So I think you really have to take a look at what kind of risks you're taking.
Sure, that makes perfect sense. Thank you, Stuart. Judd, are you seeing a lot of people coming into the office that are diversified, or do they think they're diversified? What are your thoughts on that?
Definitely. I would say we see a lot of people that think they're diversified, but usually they're not.
Okay.
And part of that is, again, the performance of your portfolio does not mean you're diversified. Another thing we'll see where people will have 7 or 8 mutual funds, and they believe because they own those 7 or 8 that they're diversified. But when we do some analysis for them through Morningstar reports, we can see that a lot of those funds own a lot of very similar or the same companies inside.
Okay.
So like Stuart mentioned, you want to look at your risk. That's how much you're going to make or lose, risk reward, when the markets go up. But your diversification is what types of asset classes and industries are you invested in. So again, it's nice when everything's going up if you're not very diversified. But of course, the same thing happens when everything goes down. Your portfolio is going to drop as well. So I would say no, most people are very unknowledgeable about how diversified their portfolios really are.
Judd, thank you so much. Stuart, how important is it to be working with a fiduciary when we're talking about planning for retirement overall?
Well, I think a fiduciary is the most important, specific thing you should look for when it comes to a financial advisor. And a fiduciary just makes sure that there's no undisclosed conflicts of interest, and that should be your primary goal, is looking for a fiduciary.
What are the different types of people, Judd, that someone could choose to work with? I know overall the most important would be a fiduciary, because basically you're putting your client's needs above everything else. But what are the different types?
Yeah, that happens to be one of the biggest misconceptions that people have, or they don't know the difference. Is my advisor a fiduciary or not? As Stuart mentioned, and we are fiduciaries at Asset Preservation Tax, and basically the difference is you have investment advisors who work as a fiduciary under an investment advisory firm, and then you have financial advisors that work under a broker-dealer relationship. And typically what most people are familiar with is that broker-dealer relationship. A lot of these big box investment houses that are out there, you go in, you sit down with that financial advisor, and again, not that they're able to intentionally harm you, that's not what they're trying to do, but if there's an extra fee, or if it's better for their company by putting you in one fund over another, then their duty or obligation is to the firm first. And you can see a lot of that in your very small print of those statements. Whereas again, on our side of things, as an independent fiduciary, and we work with Fidelity Institutional, Charles Schwab Institutional, TD Ameritrade, all on the institutional side, so no one's dictating to us what we can and can't or should and shouldn't sell our clients. And then we have to put our clients' best interests first. You know, it's not just a goal or a motto, but our licensing holds us to that standard.
Absolutely. Stuart, how important is it for someone to have a second opinion? If they're currently working with someone or they think they're doing okay, how important is it to have a second opinion?
Well, I think it's tremendously important to get a second opinion because, you know, every once in a while you just need a fresh set of eyes on the portfolio to see, hey, what's going on in there? And, you know, here's an example. A lot of clients believe they know what they're paying in fees. Many don't. But, you know, I was speaking to a client that said, yeah, I know I'm paying my advisor 1%. Well, what he didn't see was all the hidden fees that were inside some of the loaded funds or the 12B1 fees on the back end. It's really important to look at all of the fees, not just the advisory fee you're paying. And a second opinion will let you know that. We should also take a look at, you know, diversification is, you know, Judd talked about the diversification of investments, but I think it's also important to get a second opinion to get a diversification of perspectives. You know, let's flash back to November of 2020, last year. Well, what happened? It was the election, right? And remember, we're a very torn country right now politically. And there are, you know, if you watch one channel, you believe one thing. If you watch another news channel, you believe something completely different. We have these two separate realities we're existing in right now. And you would just have to flash back to say, okay, well, what was I thinking back in November? Well, a lot of Republicans thought that if Biden won, the market would crash because, you know, taxes are going up, regulations going up. The Democrats thought the market could crash if Trump won because there would be, you know, riots in the street and so forth. Well, you know, the one thing that I'll tell you is we had some of our money managers that basically went defensive, that said, hey, we don't want to take the risk of any of this downside. Then we had some of the other money managers that actually hit the gas, that actually thought that if, you know, they anticipated Biden winning and thought that with all the stimulus out there that the market would take off, and they were right. The point I'm making is that nobody's right all the time. And a lot of times people will have an advisor that's sitting there picking funds with them. If that's what you're doing, if that's the kind of relationship you have, you need to get up and leave because quite honestly, you don't want me picking your funds for you. You want the best people in the world watching. And we have access to the biggest money manager on the planet that handles our portfolios. We have some algorithm portfolios that shift risk amazingly well. But what's most important is to make sure that it's not just one perspective being reflected in your portfolio, that it's a couple different points of view being reflected.
Sure, absolutely. Are people often surprised to see hidden fees in their portfolio, Judd? I know we have to take a commercial break, but I wanted to ask your opinion on that quickly.
Yeah, as we go through and take a look at the portfolio, again, lots of times people look at performance. And as Stuart has said many times, everybody needs to get paid. So, you know, it's not necessarily about that you are paying fees, but it's what are you paying for, how much are you paying? If you could own XYZ stock and be paying a 15 basis point or, you know, 1/8 of 1% fee, or you could buy the very similar fund that would charge you 1.15. Obviously, that extra 1% is going to erode your performance.
Sure.
So again, a lot of people just look at how well they're doing or how well they're not doing, and the fees that are inside there that can eat away at that certainly do play a big role.
Judd, thank you so much. Stuart, I know that you and Judd have a special offer that you want to present to the viewers at home today. Let's talk about that and then open up the phones.
Sure. If you just call 833-652-7829, what we're offering to you today is a complimentary portfolio review. And in that portfolio review, we're going to tell you how well diversified you really are, both from a perspective position as well as a position. We're gonna, right? I just made that up. That was crazy. So we're also going to take a look at any of those hidden fees. What kind of risks are you taking? And all you have to do is, you know, pick up the phone, give us a call today at 833-652-7829. We'd be glad to help. And we have tons of clients that say, hey, you know what? I was going to call. I just decided, you know, not to, and they wait weeks and weeks and weeks and then eventually call. today's your opportunity to just pick up the phone, give us a call. We'd be glad to help.
Stuart, thank you so much. Judd, thank you so much. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. We have to take a very short commercial break, but don't go anywhere. When we come back, I'm going to ask Stuart and Judd a little bit more about what that complimentary consultation feels like for you. So please stay tuned.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. You know, I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
Welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stuart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, a wonderful show that we're having today, again, talking about things that are going on in the economy, the stock market, and everything related to planning for retirement. So we had some viewer questions come in, and I wanted to talk to you a little bit about what they are actually in this segment, because they go hand in hand with the complimentary consultation. So we had a caller that called in. Stuart, I'm going to guide this to you. Stuart, what exactly does this cost? After the complimentary portfolio review, what exactly am I looking at?
Well, the complimentary portfolio review is, as it's called, complimentary. There is no cost. The whole purpose of it is to determine what kind of risks you're taking, the fees you're paying, etc. But it's also a chance for you to get to know us, to see whether or not we're really a good fit, right? Like if you meet us and say, you know what, chemistry-wise, it's just not right, then you should get up and find somebody else that's better. And you're not going to hurt my feelings. Now, you're going to hurt Judd's feelings, but I'm pretty thick-skinned about it, right? But, except for when they call in and say that I'm too fat for TV. That's a problem. I did get that last week, which was a problem. But, but no, during the complimentary portfolio review, we really are just trying to get to know each other. I'm going to give you some great information on your portfolio. I promise you're going to leave with some valuable piece of information, and it'll also get us to realize whether or not we're a good fit.
Absolutely. Well, thank you, Stuart. Judd, this is a great question as well. It says, Judd, what are the steps or the process involved if I decide to become one of your clients?
Well, as Stuart just touched on, obviously coming in for that complimentary consultation, that gives us an idea of where you're at. When you're done with that step, obviously you're going to know what items should be addressed or could be fixed, or maybe in our case, we're just fine-tuning those things for you. So it's the come in and get to meet you, analyze where you're at, risk, diversification, tax-wise, cash flow analysis. Where are you going to be 5 years, 10 years, 20 years from now? And then the next step is implementation. And if somebody wants to move forward with us, then obviously we would help them move those assets over to one of the custodians that we work with, and then we would build from there. Kind of circling back to the question about cost, I mean, until we actually are doing something for you, until we're in charge of some form of risk that you have, there is no fee from our company. And then moving forward, based on, the size of the portfolio and the various things we're doing for you, we would obviously be able to discuss those costs again going forward. But to get to that point, to take those steps, see where you're at, see where you need to be, no cost or obligation along the way.
Judd, thank you so much. Stuart, this is a great question as well. It says, Stuart, I have a question. I enjoy your show each week, but what makes asset preservation tax in retirement different? I'm curious.
Well, I think the one thing to realize is that we are a holistic planner. And by a holistic planner, what we mean by that is that we try to leave no stone unturned. Yes, we're going to take a look at the investments. That's what all advisors do. But we're also going to take a look at taxes. That's the whole reason we have the tax office built in to our West Valley and soon to be Scottsdale office here. We're going to look at taxes, investments. We're going to look at your estate planning as well. You need to have a complete view of everything that's going on in your portfolio and your estate.
Thank you so much. This is a great question. I have to ask you, someone called and they would like to know, Stuart, what is the importance of financial planning? What are some things I should be looking for?
Well, when it comes to financial planning, you first want to make sure that you're in a position to be able to go and enjoy retirement. I can tell you, one of the saddest things I ever see is when, I have a client in his late 80s come in and say, listen, I have all this money, but my spouse has passed and I have no one to enjoy it with. Well, financial planning will allow you to actually be able to enjoy your retirement, to be able to know you're not going to run out of money too young, that you'll be able to enjoy it during those early years of retirement. It's really important to just have a plan so you can enjoy the most out of retirement.
Stuart, thank you. Judd, this is a great question too. This is a caller that called in and she would like to know, Judd, can you explain the difference, please, between tax preparation and tax planning? Why should I be concerned?
Well, so, the main difference is tax preparation is reactive. The year's already over. We have all the documents from last year or the prior years or whatever we're working with, and a tax return is put together for you based on that information provided. Now it's the summer. There are still some people out there doing tax preparation, but really you should be doing the tax planning. Tax planning is proactive, where we want to look at, okay, where were things last year? Where are you right now? What changes can we make to benefit you come next spring when the tax bill's due? And where are you going to be again 3 years, 5 years? Sometimes people have to pay more taxes when they first retire so that they can be tax-free or very tax efficient later on in life. Not just again for the bulk of their retirement, but in the case of a married couple, when something happens to one of the two spouses, taxes change. When you shift from being married filing jointly to a single tax filer, you get to keep the larger of the two Social Security benefits. Maybe there's a pension that still pays to you, and then you've got those required minimum distributions that still have to be taken out, which again tend to push you up in a higher tax bracket. So again, tax preparation you're going to do each and every year reactively, but the tax planning is something that should go on all year long, and you should be looking, not just months, but years into the future.
Judd, thank you so much. I know that you and Stuart have a special offer that you want to deliver to the viewers at home today. Let's talk about what that is and then reopen the phone lines.
Absolutely. Well, for everybody out there watching today, and I know Stuart mentioned it, we get a lot of people who catch the show here and there. They didn't necessarily tune in directly to see this, but something caught their eye or their ear along the way. If you call 833-652-7829, we'd be happy to sit down with you. It's your hour. So the more information you bring us, the more we can put together for you. The questions you have, if it's related to Social Security or Roth conversions or taxes, those are the things that we'll address for you. It's your time. So 833-652-7829. We look forward to seeing you at one of the 3 offices. Again, we've got our West Valley Sun City office, we have our Scottsdale office, and then we have the East Valley Tempe office as well. So 833-652-7829. 7829.
Thank you so much, Judd. Thank you, Stuart. To the viewers at home, the phone lines are once again now open. That number to call is 833-652-7829. We have to take a very short commercial break, but don't go anywhere. When we come back, we're going to talk about taxes a little bit more in depth and perhaps some changes that are on the horizon. Stay tuned.
This is the story of how you get from here to there. Right now, you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. Excuse me, I'm joined today by Stuart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. See, I get all choked up during the show. It's really what happens. I wanted to talk to you a little bit about, obviously, Stuart, some tax changes that are on the horizon. Obviously, a lot of people are questioning what's going to happen in the future. What are your thoughts?
Well, first of all, you just have to realize that we are in the most efficient tax window in history right now. And listen, changes in the air, right? There's no surprise, President Biden campaigned on raising taxes. So we know that's going to happen. The details we aren't quite sure about. What we do know, though, from an income tax perspective, is I'm gonna first pull up a slide so you can take a look at some comparisons. But what I want to show you is the tax environment that we saw in 2017. Now, these are the tax brackets in 2017 before the Trump tax cuts. Now, this also takes into consideration standard deduction, which most illustrations don't show. The next one here is the changes under the Trump tax laws. Well, a lot of people said, oh, it only benefited the wealthy, but let me overlap these for you when you take a look at standard deduction on the third slide. And what we'll show you here is that with, under the Trump tax cuts, almost every bracket saved money in taxes. And so, the thought that it disproportionately affects the wealthy just isn't fully accurate. Almost everybody is saving, money on taxes here. So why are we showing you this slide? Well, we just think it's super important to make sure that you take advantage of the window that we're in right now, because listen, we don't know if it's going to be retroactive to this year or if it's going to be effective next year. But we think it's important that you have a tax plan. This is the most crucial time in history to do tax planning. And if you are not doing it, it's a major, major faux pas. You need to know. Now that you know there's an issue, you need to take care of it.
Absolutely. Judd, I want to ask you about capital gains, if we could talk about that. How about, is it an all-time low right now? What's going on with capital gains?
Yes, so capital gains right now are not only extremely low and efficient, but that is one of the big items that's out there that will affect almost everybody in future years. So currently, if you own a long-term appreciated asset, so whether it's stock, a building, a rental property, anything that you've owned more than a year, and you were to sell that and it's gone up in value, you have the ability to pay a much lower tax rate on that, or in some people's cases, you pay no taxes on that if your income is low enough.
Okay.
But what's been proposed heading into next year, and we've seen a variety of these things, but they've talked about moving capital gains from either a 0 or 10 or 15% rate up to ordinary income. So if you're in the 22% bracket, that's what you would pay. If you're in the 28%, that's what you would pay. They've also talked about increasing it if someone were to have a gain over $1 million or income over $1 million with a long-term capital gain, then in that case, you would be subject to a 39.7% tax plus some other Medicare fees, the Romney tax, some other things in there that would push it up over 40%. And I know a lot of people out there might be thinking, oh, well, $1 million, I don't have to worry about that. But I originally grew up in Iowa, moved out here and went to high school and college. And if someone has a family farm, to have $1 million worth of real estate, if you have to sell that or do something with that, that's not too far off. The real estate market here in Phoenix has been exploding. So if you have a investment property you bought for $250,000 8 years ago, and today it's worth $400,000, $500,000. I mean, these are amounts that are out there, and if you're not proactive, again, doing that tax planning, the capital gains, some people think, oh, well, I don't make more than $400,000 a year, so the new changes aren't going to affect me, but that's not necessarily true when it comes to the capital gains.
Sure.
So again, it's one of those where you want to know where you stand, know what the pluses and minuses are. Like Stuart mentioned, if it does end up being retroactive, if they make the changes and put it in force for this year, then people are going to have a big tax bill that they're going to be stuck with come next spring.
Sure, absolutely. So Stuart, what it comes down to overall is proper planning. So if someone is in the viewing audience today, if you will, and they're unsure of what they should do as far as picking up the phone, what type of advice would you give that person right now?
Well, I think it's really important for you to take action now. You know, talking about taxes, you have to understand the time is ticking. We are running out of time here, and there's not going to be much more time left to do this sort of planning. So if you just pick up the phone, give us a call, we'd be glad to take a look at what kind of tax implications you have down the road. We're not here to necessarily review your past 10 years of taxes. That's not what I'm offering here. I had somebody bring in 10 years of tax returns, and I'm like, listen, we're going to take a look at your structure, right? We're going to take a look at how efficient you are. All you have to do is give us a call at 833-652-7829. I'd be glad to take a second look. And listen, we have this, 3 convenient locations here in Tempe, Scottsdale, and in the West Valley at our Sun City Surprise office there.
And obviously just a minute and a half left of the show, but Judd, how long is that initial consultation? How much time do you typically book for that first client coming in?
Yeah, so typically we set aside an hour and 15 minutes. But the one thing we always want people to realize is that if you bring us in a lot of stuff, which you're welcome to do, it takes time for us to analyze that. So we might sit down with you for that first hour, collect the data from you, have our tax folks crunch those numbers. We go through and do the cash flow analysis, et cetera, Morningstar reports, and then we might need to sit down with you again for another hour and 15 minutes. And the reality is that, again, there's no charge for that because, again, we're interviewing for that job. We want to see if you need us, if there's a fit, and then going forward from there. So typically, an hour is about all I think most people want to spend with me at a time because I can get pretty dull. But Stuart's he's the personality of the group. So.
You're both wonderful. Thank you for another amazing show this week. To the viewers at home, most specifically, thank you for spending time with us. That number to call is 833-652-7829. If you have questions about how to plan for retirement, Judd and Stuart have the answers for you. Be safe, be happy, be blessed, and we will see you back here 1 week from today. Thanks for watching.